On May 6th, at a branch of the Agricultural Bank of China in a town in Zhejiang province, a woman became involved in a dispute with bank staff after she was unable to withdraw her own savings. During the confrontation, she damaged part of the bank's facilities, drawing hundreds of local residents to the scene. According to people at the scene, one possible reason she could not access the money was that the bank had used her deposit to purchase wealth management products. Others claimed the money could not be withdrawn because the bank had allowed her husband to withdraw the funds without her authorization. Some online users said there have recently been several cases in which depositors' money appeared to disappear without explanation, raising suspicions that there may be internal misconduct within banks.
Where did my 29 million go?
On April 11, a woman in Tangshan posted a video saying that in early March, she transferred 29 million yuan in deposit funds into a supervised account at the Agricultural Bank of China as part of a land auction bid. She said bank staff confirmed the transfer in person at the time, but just a few days later, the entire 29 million yuan in the account had disappeared. The woman said that after learning the auction house manager, identified by the surname Wang, was allegedly involved in a case, she immediately went to the bank to check the account. She said she was then told that no funds remained in the account. When she asked the bank manager for an explanation, those involved continued to avoid responding, and she has received no answer so far. She also said that every video she uploaded online to defend her rights was deleted. After her video was reposted on X, many online users expressed anger. Some wrote, "This is outright robbery." Others said, "A so-called supervised account sometimes only supervises your money, making it easier for others to take it at any time. It's absurd." Earlier, in Fuyu, Jilin province, two depositors also spent months seeking answers after 18 million yuan in savings reportedly disappeared under unusual circumstances. According to reports, Ms. Chen, who runs a company in Jilin province, deposited 10 million yuan in company reserve funds at Fuyu Huimin Rural Bank on October 28, 2025, because she trusted the bank. But just over a month later, the money was allegedly transferred out in full, even though she had not gone to the bank, still had her card, and had not disclosed her password. The transfer was reportedly carried out by bank employees using only a copy of her ID card. After they reported the card lost, issued a replacement, and forged her signature. A local woman, Miss Wang, had a similar experience. She deposited 8 million yuan at Fuyu Huimin Rural Bank on November 10 last year, believing the money would be safely kept there. But when she checked her certificate of deposit in January, she found that it had been reported lost without reason, and her 8 million yuan principal had disappeared. Together, the two women lost 18 million yuan. By the morning of May 7, Chinese media reported the latest development. The employee involved in the case had been formally arrested. The principal and interest that had been transferred from the two depositors' accounts had been fully paid by Jilin Rural Commercial Bank. Recently, the former Fuyu Huimin Rural Bank was taken over by Jilin Rural Commercial Bank and renamed Jilin Rural Commercial Bank Fuyu Branch. These two women were fortunate to recover their money, but such successful refunds are rare. For Jilin Rural Commercial Bank, which took over the branch, this means absorbing a serious loss, since it remains unclear whether the stolen money can be recovered. Similar incidents have been reported widely. On March 11, Ms. Cao from Xinjiang said she had saved 80,000 yuan through the years and deposited it in 2019 at a postal savings bank branch in Manas County for a 1-year fixed term. But when she went to the bank in 2020, she found the money had disappeared. She continued seeking justice, but said bank leaders later sent a lawyer to her home to warn her. Someone wrote online, "There are countless cases like this. We should tell elderly family members to keep their money only in the 6 major banks, avoid all wealth management products, and not trust any financial managers in bank lobbies." Another said, "Many people inside banks guide customers into investments. Customers think they are filling out deposit forms, but they are actually signing investment forms. A year later, the investment money may already be gone.
I am reporting the ICBC branch in Guangshan County under my real name for defrauding ordinary people of their hard-earned money.
On January 20th this year, a woman in Xinjiang, Henan province, publicly accused the ICBC Guangshan County branch of illegally taking her personal savings. She said she made an 800,000 yuan fixed-term deposit at the bank in March 2022. But without her consent, bank staff allegedly lent the money to a real estate developer in order to earn higher returns. After the real estate company collapsed, the bank refused to repay her. The woman said she felt desperate and collapsed and broke down crying inside the bank. The Guangshan branch involved said the matter happened several years ago and that both the customer and the bank had reported it to the police. The bank also shifted responsibility to a salesperson from an outside company. There were no further public updates on the case. On August 13th of last year, someone from Fujian also posted a video accusing a bank of misleading their family. The user said a family member deposited 100,000 yuan at a bank, but 90,000 yuan was later transferred into a wealth management products. The incident reportedly happened at the bank counter, where an insurance and wealth management representative encouraged the deposit by claiming it would earn higher interest. After problems emerged, the person in charge denied responsibility, saying they worked for an insurance company and had nothing to do with the bank or the matter. People criticized the bank for hidden operations and misleading sales practices. On October 27, 2024, a woman in Guangzhou went to a rural commercial bank to file a complaint, saying that money in her account had suddenly disappeared. She also said she received daily text messages showing card purchases. Some people said online they had similar experiences. The woman was later driven away by police while seeking answers at the bank. The best-known depositor rights case may be the 2022 collapse of several village banks in Henan province. Starting on April 18 that year, 4 village banks in Henan almost simultaneously shut down online withdrawal and transfer services without warning, leaving many depositors across China unable to access their savings. According to reports, about 400,000 depositors were affected, involving tens of billions of yuan. The incident caused widespread panic and led to several protests by depositors, which were suppressed. Some depositors were reportedly monitored, beaten, arrested, or detained by the authorities. Some large depositors still have not recovered their money, and some have reportedly died without seeing their cases resolved. Because village banks have fallen into bad debt problems and triggered social unrest, Chinese authorities have pushed them to dissolve more quickly since last year, with shareholder banks taking over their assets and liabilities. Public records show that village banks in China are banks approved by the authorities and funded by financial institutions, non-financial companies or individuals. They are set up in rural areas where most depositors are local farmers. Their largest or sole shareholder must be a bank, with a stake of at least 20%, and they may only issue loans within the county or district where they are located. In late April, Jiangsu Dafang Jiangnan Village Bank also dissolved, and its assets, liabilities, business operations, branches, employees, and other rights and obligations were taken over by Jiangsu Jiangnan Rural Commercial Bank. Tianjin Rural Commercial Bank opened 10 branches to take over Tianjin Jinnan Village Bank, which was dissolved around the same time. In Yunnan Province, Tangchong Minshang Village Bank was dissolved, and its business was taken over by China Mingshan Bank. According to reports, in just over 100 days from the start of 2026 to April 20th, 72 village banks completed withdrawal and deregistration. During the same period last year, the number was 27, marking a year-on-year increase of 167%. China's National Financial Regulatory Administration showed that 226 village banks completed deregistration and exited the market in 2025. The numbers were 83 in 2024, 9 in 2023, and 8 in 2022. In 2025, nearly 500 banking institutions in China exited the market through mergers, dissolutions, or deregistrations. far exceeding previous years. About half of them were village banks. During the same period, commercial banks also saw a wave of branch closures, with more than 9,000 physical bank branches shut down over the year. US economist David Huang said that over the past few decades, many village banks in China had become vehicles for local elites, informal investment platforms, and corruption by controlling shareholders, resulting in very bad debt levels. He said that having major banks take over village banks only internalizes and shifts the risks, which could create even greater problems. Economist Chang Xiaonong, who previously worked within the CCP system, said that large banks in China are not necessarily safer than smaller ones. He said the problems facing small banks are often tied to local governments, while large banks may involve broader systemic financial risks at the national level. In his view, moving savings to large banks may only delay the underlying problem. Financial commentator Ma Yifeng said village banks and rural credit cooperatives have suddenly become branches of major banks. The signs have changed. The staff have changed. The customers may no longer see the account managers they once dealt with. Whether their certificates of deposit will still be fully honored is uncertain, he said. In his view, this is not real financial reform, but a financial version of the Hunger Games, where big fish swallow small fish. Depositors were once promised slightly higher interest rates at village banks, but after those banks are absorbed, their interest and services may disappear. He also warned that many of these small banks were already in serious trouble with poor asset quality and large amounts of bad debt, raising questions about whether major banks can truly absorb the losses. Reuters recently reported that China's wave of mergers among small banks, a sector worth about 8 trillion US dollars, could increase future risks. Ma said China's financial sector is not defusing bombs. Instead, he said it is tying 100 small bombs together to create one super bomb. If it explodes one day, it will not be just one bank that falls, but a whole group of banks collapsing together. Banks have long been seen as the final safe harbor for the savings of most Chinese families. But even before 2019, the expansion of the real estate bubble had already placed broad pressure on China's banking sector. After the property bubble began to collapse, the economic slowdown placed even greater strain on the financial system, pushing many banks into a more fragile position. The deeper issue, according to critics, is that in China's financial system, the CCP oversees finance and commercial banks do not operate with full independence. Senior executives at banks are appointed by the authorities and are expected to serve state priorities. When the government needs funding, banks are expected to provide it, while their ability to recover unpaid government debt is limited. State-controlled major banks have long provided financial support to large monopoly-driven industrial groups, while city commercial banks have continued funding local governments. Many of these state-backed companies and local authorities rely on new debt to repay old debt. When government-backed bonds mature, new bonds are often issued, and banks under state influence are expected to purchase them. As a result, depositors' savings continue flowing into government financing. Economist Dr. Chang Xiaonong said that the savings of ordinary Chinese citizens have long been used to support large-scale state operations, including long-running infrastructure projects and heavy local government spending. When local governments cannot repay their debts, banks become the final channel for financial support. In his view, ordinary depositors ultimately bear the costs. Cases in which depositors face difficulty withdrawing funds are not limited to small banks. Similar complaints have also been reported involving major banks in China. On March 4th, in Miyun District, Beijing, a woman went to China Construction Bank to withdraw 70,000 yuan from a mature fixed-term deposit, but was refused. Bank staff first asked her to explain how she planned to use the money, and later told her to call the police and other agencies. Some people commented, "It is easy to deposit money, but hard to withdraw it. I should remind myself not to keep too much money in the bank." Another wrote, "But scammers can transfer away hundreds of thousands or even millions from your account. Now you know who is doing it." On April 24th, an absurd incident occurred in Xingtai, Hebei province. Mr. Shi, A local resident with psoriasis was unable to move or speak and urgently needed to withdraw money for hospital treatment. His relatives took him by wheelchair to the Huitong branch of Xingtai Bank, but even with him present, the bank still refused the withdrawal. Someone commented, "They cannot stop telecom fraud, but they create barriers everywhere when people handle legitimate business." Someone wrote, "Everyone, if you receive wages or have savings, convert them into cash. Keep only a small amount in WeChat Pay or Alipay, and do not leave money in the bank. It may be better to buy a safe and keep it yourself. If the cash gets worn or damaged, spend it or exchange it from time to time." Another person said, "I even suspect the money lost to fraud is being used by them to balance the books." In Taiwan, people can easily withdraw tens of thousands from an ATM, but in China, they often have to make an appointment. If borrowers want to repay their mortgage early to save on interest, banks may refuse because early repayment means the bank loses decades of interest income. So banks set up barriers, such as penalties, service fees, and waiting periods, making it difficult for borrowers to pay off the loan. In some cases, when wealth management products mature and customers try to redeem them, banks say the payout has been delayed, with no clear date for when the money will be available. Financial commentator Ma Yifeng said this situation amounts to a slow-motion bank run. A bank run occurs when a bank does not have enough cash and too many people try to withdraw money at the same time, causing the bank to collapse. Instead of allowing that to happen all at once, banks use procedures and restrictions to slow down withdrawals. Dr. Cheng said banks are now using various technical barriers to prevent money from flowing out and to delay or block a large-scale bank run. As a result, deposits become digital in name only. The money is legally yours, but in reality, it turns into a set of numbers that can be seen but not freely used. In recent years, China's economy has continued to slow. While top CCP officials have repeatedly promoted a positive view of the economy, financial data has become harder to ignore. According to the latest official data, China issued almost 16.3 trillion yuan in new RMB loans in 2025. That was nearly 2 trillion yuan less than the 18.1 trillion yuan issued in 2024, and far below the 22.8 trillion yuan recorded in 2023. Corporate financing has relied mainly on instruments such as bills and bonds, reflecting weak economic activity, with businesses unwilling to borrow and fewer major projects moving forward. Meanwhile, short-term household loans, a key sign of consumer confidence, have fallen sharply. Data released by the People's Bank of China on April 13th show that household loans increased by only 297 billion yuan in the first quarter, far below corporate lending. The gap shows a clear split in credit demand. Short-term loans fell by 164 billion yuan, suggesting that consumer demand remains weak. In fact, weak consumption is not the only problem. The number of people in debt in China is also rising. In 2025, the number of people on China's personal credit default blacklist reached 8.5 million. In 2020, the number was only 5.7 million, meaning it rose by nearly 50% in 5 years. Behind those 8.5 million cases are families under heavy financial pressure because when one person cannot repay debt, the whole family may suffer. Profit margins across China's banking industry are also shrinking. Banks make money from the spread between lending and deposit rates. The wider the net interest margin, the more profitable banks are. The narrower the margin, the greater the pressure on banks. China's commercial banks are now under growing pressure. In the third quarter of 2025, their net interest margin fell to 1.4%, the lowest level on record. By the fourth quarter, the figure for major state-owned banks had dropped to 1.3%. In other words, for every 100 yuan lent out, banks earned only 1.3 yuan a year. At the same time, the non-performing loan ratio for China's commercial banks stood at 1.5%, with bad loan balances reaching 3.5 trillion yuan. This means the bad loan ratio was higher than the net interest margin, suggesting that annual earnings from lending may not be enough to cover bad debt losses. The situation is even more serious for rural commercial banks, where the non-performing loan ratio reached close to 2.9%. That means nearly 3 yuan out of every 100 yuan lent by these banks may not be recovered. In addition, the banking sector's average return on equity fell to 8.1%, while return on assets dropped to 0.6%, both record lows. In 2024, net profit growth in the banking sector fell to negative 2.3%, marking the first negative growth since 2021. State media said the capital adequacy ratios of China's six major state-owned banks remain between 17 and 19%, far above the international warning line of 11.5 to 12%, suggesting that the banks remain healthy. Financial commentator Ma Yifeng said hundreds of banks were merged in 2025, but officials did not call it failure. They called it optimizing the layout. He said the wording may sound positive, but cannot hide the reality. He said capital adequacy ratios appear high because banks are using money to buy government bonds, which carry a zero risk weight. Once banks buy government bonds, the denominator in the calculation becomes smaller and the ratio rises. In his view, this is not a sign of health, but a form of window dressing. He compared it to putting blush on a critically ill person and calling it a healthy complexion. He said banks know they are in trouble, but they cannot say so, because if they do, people may rush to withdraw their money. As a result, he said, banks and state media are putting on a performance while ordinary people are kept in the dark. Dr. Chang also warned that a banking crisis does not have to begin with an official bankruptcy notice. If a bank tells customers, sorry, we do not have that much cash right now, its credibility has already collapsed. He called this an unacknowledged bank run. He said the CCP is using technical measures to hide this reality, and if several banks can no longer hold the line at the same time, it could become a financial disaster for society as a whole.